Welcome back, guys. It's currently Saturday morning, 3rd of July. We are going to do some back testing of the end of the week that we are analyzing. Is the 7th of September 2012. As you should remember, this is the NFP week. So we had the ADP non-farm employment change that showed much better results and figures than expected and than previous. We had less unemployment claims. And today, NFP, we are looking at previous 141K of employment change, forecasting less than previous, forecasting same unemployment rate, and a little bit of better average hourly earnings. As we saw last week, we had the weekly candle almost got flipped, and if we might have better non-farm employment change NFP, it will flip bearish. We had these impulsive and aggressive bearish candles and sellers in control due to the good ADP figures. Exactly yesterday's ADP. So we are going to start from here. So as you know, we are in a bearish trend. We are creating lower highs, lower lows, lower highs, lower lows. Sort of, we can say it is printing. Currently, we are a little bit traveling outside of the trend line, but of course, unless it breaks these highs, these previous highs, this structure is still bearish. So even if it goes to 1786, 1780, of course the price will stay, the trend will stay bearish because it created a new lower high. So let's go in the intraday time frame. So for our time frame, we see clear bearish structure. This was the ranging that we can expect always prior to the NFP data, NFP week. The hourly we saw we had a continuation bearish during the Asian, reacting at the previous lows, little bounce, and now we had it was an impulsive bearish candle. It got a little bit of a reverse and a rejection. So yes, we are going to see. I'm not expecting that much of impulsive moves before the actual data, which is coming out at 12:30 GMT, which is usually 8:30 a.m. Eastern, at the start, after half an hour of the start of US New York session. So I'm not expecting a lot beforehand. So we might travel range as we did prior between these two key levels, 1697, 1687, which is 100 pips range, perfectly standard. Of course, I'm not entering trades unless we see a strong confirmation from NFP. So let's start and see how it goes. The 5 minutes, we are ready. Okie dokie, let's go and move. Of course, it's currently 7 a.m. starting New York, London session right now. So we're looking up at a pullback, something that usually happens during London, even if this Asian session brought price down, and even if the trend is still bearish, at the start of London session, some pullbacks have to be expected. now we will see the reaction at this key level. If we get a rejection, it will probably then the price travel further down. Let me cancel this line. Okay. And we see on the lower time frame the reaction at the previous lower high. We see some buyer exhaustion, not a lot of control. Let's go quickly on the 1 minute chart. Okay. You see, we are creating a sort of order block here, printing a barcode. Now we are, impulsively reacting at the top of this order block. Let's see, at the key level, we might see a break and retest, and to then go maybe revisit the next key levels, which is like 50 pips away, or even we get a rejection. Retest of the top of the order block. Let's see if it's creating new lower, higher lows. Let's see. Instead, came back directly into the range. Second attempt to break the key level, and it's ranging again. Let's go on the 5 minute. It's 10 a.m. No need to rush any move, as you know. As I said, we have NFP coming out in 1 and 2 hours. There is no need to rush any move, to take any impulsive trade. Market is always here, and there are always opportunities. So let's see what is the NFP sentiment going to be. The sentiment thanks to NFP data, of course. That's what I wanted to say. And of course, as we saw in the real NFP in June 2021, in July, the unemployment rate, let's see the impact of it rather than just the NFP figures. So as you can see, we are creating another block here. We are creating another block between these levels. Okay. These highs and these lows, something that we might take into consideration now that is coming to the almost to NFP release data hour. Now we see reactions at the key levels. Okay, let me slow down. And we move to the real NFP. Okay, so we still have 5 minutes. Let's go. Okay, we have 1 minute left, and we're going to do it in real time. Okay, last minute, and we see the figures coming out. Of course, I will pause it. Spread should be crazy right now. The minute prior to the NFP is always crazy. 3, 5 pips, 7 pips of spread, and it's absolutely crazy. 30 seconds left. Remember, we are expecting less than previous. same unemployment, but a little bit of better average hourly earnings. Let's see how it goes. 15 seconds. Let's see here. Okay. So we got way less figures, 96 instead of 123. Less unemployment, but much less hourly, average hourly earnings. So we had negative for the dollar, positive news because we have less unemployment rate, but we have negative news because we have much less NFP figures. So we are coming to the same sentiment that we saw yesterday, because we had good NFP data and not good unemployment unemployment rate. So investors chose to prefer the latter. So the unemployment rate being bad determined the trend. What are we going to see now? Okay. Let's see how it moves. We can see spikes up and down, and we see, okay. In this case, investors decided to consider at least let's see if it's a liquidity grab. Of course, we have a 95 pips candle. Now I'm doing it in real time. Of course, it's not, this is data, recorded data, is not live, but we got, let's see if it is a liquidity grab or it is something in continuation because of the bad NFP figures. Looks like we travel above the key level. Now we're getting a rejection. Remember, this is 20 pips rejection. Looks like it's traveling back up in continuation. Looking strong for the dollar weakness. So we are seeing dollar weakness. We are at the previous highs. Remember, this is just 1 minute candle. Yeah, in real time. This is absolutely crazy. Okay, this is the end of the first 1 minute candle. 166 pips of candle. That is crazy. Let's see the reaction at the key level. Breaking above. Okay, let's speed this up. So now it's clear that after 160 pips, investor shows the NFP bad data rather than the unemployment rate. Continuation up. We got a rejection at the key level. Crazy stuff. Didn't enter any trade. This was more of backtesting the NFP data, and when I saw the actual results, the numbers, I was really curious to see what the investors will choose. Now we are retesting this key level. We can have further entries up. This is like 30 pips stop loss to back up. Creating higher lows, creating higher lows. Let's see if we see exactly some impulsive candles. Okay, it looks like a nice rejection here. Pullback retesting the previous highs. Let's see if it breaks below. Looks like we need to grab some liquidity. Retesting the highs, not going back down yet. Okay, but failing to creating new highs. So we can either enter in a consolidation period, maybe even retesting this level to further travel up, since the trend is strong bullish for gold. Okay. Exactly. We needed to grab some liquidity, not breaking below the key level, to then travel back up. Okay. Strong bullish. From NFP, 1697 key level to 17. It's like 400 pips in 2 hours, 2 hours and a half. Crazy reaction at the key level. And it's almost London close. Okay, that's it. Very interesting. So to recap, we range through the morning as expected. We had the NFP expecting a lower number, yes, but not this low. They were expecting 123,000. They got 96 instead. We had a more positive unemployment rate of 8.1% instead of 8.3%. Less average hourly earnings, meaning that that's not good for the US economy. And we saw 1 minute candle 160 pips, and we saw 450 pips movement in 2 hours and a half. That's absolutely crazy. So okay, for now, for this backtesting, for ending up the NFP session, NFP week, that's it. I didn't enter because I still have to learn, and this is the purpose. For me, it's very difficult to enter, to think about entering trades, and I will continue doing backtesting session to further try to improve. Not try, I will to improve my execution. This is a nice picture of the block created. Impulsive, break, retest, little rejection. We saw it live, we analyzed, okay, we didn't have the test on the dot, but we never broke below the level, and then continued up pretty clearly in